Right, guys, welcome to this week's Elliot Wave weekly market analysis webinar. We do it on a Monday. I've been getting a lot of inquiries as to when I'm doing the webinar. So I just say that webinars on Mondays at 5 p.m. South African time. That is 1500 GMT. Okay, so every Monday at 5 p.m. South African time, 1500 GMT, we're going to be having this webinar to run for about an hour, hour and a half. Okay, so I'm going to get started now. So the chart I have there is for the dollar index. We're going to be looking at a couple of charts for the week ahead. So we always start with the dollar index because the dollar index gives us sort of direction for, as we all know, that the dollar index is an index of the major currencies against the US dollar. So it is important to know the direction of the dollar index. So what I have here on the screen is a weekly chart of the dollar index. I'm not going to go through the whole chart from the monthly going all the way down to the hourly chart. What I'm going to do now is just going to go to the weekly and show exactly where we are on the market and get some analysis there. All right. So let's start with the dollar index. So what we're looking at here is that the dollar index impulse that has been coming from long way back from 2002 ending around the 2008 area. So from 2008 lowest swing, the dollar index has been on a rise. Okay, so this is how it has been on the rise. It looks like it's been rising with an impulsive move. So you can see here we've got an impulsive move here. And after that impulsive move, you've got a correction. Let me clear everything. Let me start it from scratch. Show the impulse there. That's our impulse that we have over there. Right. So after the end of that string, we have this impulse. We have this impulse over there. And then you get another, and you get a correction. This correction looks like a regular flat. Okay, and then you get another one. And this time I'm going to label it with a different color because this looks like it's a smaller correction than this one. Look at this one. We've got this correction over there. It's another regular flat. Okay, why am I doing it with a different color? I'll show you just now. It's another one, the same degree as a smaller one. Okay, so we're anticipating that this one is going to be a big red one. It's going to be a big red one here. Right, so I don't know whether it's going to be this before we go. It doesn't matter. But what we know is what we have right now. And what do we have right now? We're just going to label it now. We're going to label what we have. So what we have is a yellow impulse. And I'm going to label it. Now, you see what I do is I identify the impulse, the structures first. So here we've got a clear 1, 2. And this 2 you can see does not break here. So it's valid. So I've got a 1, 2, higher degree here. So if I've got that 1, 2, I'll be anticipating that I go for wave 3, right, in yellow. But I get an impulse here. I'm going to do it in green. And then I get this correction, which is a regular flat. Okay, regular flat in green. So I'm going to label this 1. It's a lower degree. It's lower degree than that one. 1, 2. So obviously the next one is going to be a 3. Okay, and then that's going to be a 4. That's going to be a 5. Okay, if this is my 1, 2, 3, 4, 5 on the dollar index, what is that 5 completing? It is completing a wave 3. This is your wave 3 that we're anticipating. So after wave 3, we're anticipating a wave 4, a wave 4. All right, so a big wave 4 in yellow. But before this big wave 4, we still have this wave 5 that is completed here. All right, so this is what we have over there. Let's just get the green color again. So what happens after wave 5? You get a corrective structure ABC, right? So this could have been your A, B, C. So right now we are on this A move, which is going as a 1, 2, 3, 4, 5. Okay, we've got a 1, you know, with 5 is with A is an impulsive move, 1, 2, 3, 4, 3. Sorry, here 4. So we still want this 5 to complete here. We are waiting for this 5 to complete to the downside before we get this move to B. Okay, so that's where we are right now. So after getting that wave 5 to complete, obviously we're gonna have, and it does not have to be an ABC, guys. It can be any corrective structure here. It can be any corrective structure, but whatever corrective structure is going to be forming here, it will be completing a wave 4. And after that wave 4, then we're going to get to another big wave 5. So that is long term because we are on the weekly chart here now. So let us come here on this A and find our trade. Okay. So if I just had to mark these corrections here, this is what I would have. I would have something like this here. First wave correction, 1, 2, 3, 4, 5, internal, which is 3, and then I get a wave 4, which is this one is correcting here. All right. After wave 4, then we get a wave 5, but we are still here. We are not even, we haven't completed wave 4 yet. Wave 4 still has a long way to complete. All right, so let's clear all that and come here on this A. This is the A move that we're looking for. Let's get a 1, 2, 3, 4 right now. We want that short move to the downside. We want the wave 4 to complete to the downside here. Okay. We want the wave 4 to complete over there. So I'm going to go to the daily. So just downgrade the time frame here. So downgrading the time frame is nothing but zooming in and just getting more candles to see clearly what is going on. So here's the labeling that I've got on there. Right, so remember that wave 5, I had drawn it with a different color, but here I'm just showing it exactly how I've labeled it. Right, so we've got it's the dollar index. Still looking at the dollar index. 1, 2, 3, 4. We want this 5 here. We want this wave 5 to complete over there. It hasn't completed yet. So to get that wave 5, we need to see how the end of this wave 4 is going to be. So I'm going to zoom in here, go into the lower time frame, go to the 4-hour chart to understand this wave 4. It's the dollar index. Right, so what is happening with this wave 4? Right, so this is where I started the webinar last week on this wave 4. It still has not broken to the downside for us to confirm that we are going for that wave 5. So what do we have right now? Right now, when I look at this, there is this big correction here in the middle. And that is telling me that we are having this one correction. This correction, you can see it's correcting everything before it. And then we're getting this last correction to the upside here, which is a red correction. All right. So lower degree than that. Okay. If I had to label it, I will label it like this. This is your W. You've got 3 waves there. 1, 2, 3. X, Y. Right? Is this Y completed? We'll see just now. Looks like it's not completed. Right. So let's go lower degree with a green color. This is exactly what I did last week. So lower degree, you get another 1. You get another corrective structure here. Right? And then you get a 3. What does that give you? It gives you a W, X, Y in green. Right? There we go. So if you were to continue labeling in the D degree, this will be also a WXY in green. I'm not going to put in a Y there, but you have a Y as well. But look what is happening here. You've got a lower degree WXY here. You need also a lower degree WXY here. So which probably means that you are having something like this, A1. And look what you have there. You've got a nice flat correction over there, which after completing to the upside will give you the Y in green as well, yeah. So it's just the Y, this yellow Y, we can just take it off here. So the Y will be here as well. And that will be the end of wave 4, giving you a clear 1, 2, not like that. Not like that. Your 1 is from here up to the start of the correction, 2, giving you a 3. and that is giving a WXY correction. It's a 3-wave correction. There's no 5 waves or anything like that here. This is your wave 4. So what this means is that we are expecting one more push higher on the dollar index. So it means short-term dollar strength. Short-term dollar strength. Like this. Remember this wave, this red wave does not seem to have completed there. We still need to complete it. Right? Still need to complete that. And this correction here is telling us we're going to have a push higher on the dollar index. This is on the 4-hour chart. Let's clear everything over there. Right. So just to show that correction specifically on the degree. One, two, three. Break. Starts to break. If it breaks out of here, it will give us a confirmation that it's going to give us one more up. Okay, so if we get that one more up, it means short-term dollar strength. That's what we're going to be looking at. Completing this lower degree to complete the higher degree in red. That's how we're looking at the dollar index. If we just put on the labels over there, that's how I'm looking at this. Right, so I haven't even put it on there. So I can just put on the labeling while we are here. WX and then that Y. Right, lower degree than that, it will be WXY. Lower degree than that, it will be a WXY. Right, so that's the dollar index. So what I've just done here is exactly the inverse on the Euro US dollar. Let's look at the Euro US dollar. Let's clear everything. Euro US dollar. So similarly, Euro US dollar, remember the 1, 2, 3, 4, 5 I was looking at? On the Euro US dollar, I have the same impulsive move here on the Euro US dollar as well. 1, 2, 1, 2, 3. See, this one has already completed the third wave. Third wave has completed. We are now also on wave 4, but now we're looking for wave 4 to the upside. For wave 4 to the upside. Okay. Let me switch off the labeling because it's all about the patterns. Let's look at what patterns we are looking at here. So let's remember this is your wave 4. Let's look into this wave 4 on the 4-hour chart. After wave 4, this must go, right? It must go for wave 5. We're waiting for the big move upside to the upside, but we don't know when that is going to come because the market does not move in a straight line, it moves in waves. Okay, so we're waiting for something like that. So let me clear all that and show what I'm looking at. Similarly with the dollar index, you'll see that I have this big correction here. See, this correction is the biggest since the start of this swing here. That is expanding flat, right? So after that, I also have the red wave here, which is this one here, But then again, has this red wave completed? Similar to what I had on the Euro US dollar, using the green degree, this may be another regular flat that's telling us that maybe we get a short move to the downside. And then that gives you a 1, 2, 3. Here you already have you had your pullback there, 2, 3. Right? So that could be the same as that. You get a move to the downside. So it means that the Euro US dollar may still give us a move down before we actually go up. This move here, forecasted over 4 weeks ago. 3 to 4 weeks ago, forecasted this move that we've got this deep correction in here. So we might as well go down, get the move down. So what is happening here is if we had to go a degree lower, even lower, let me use the white color here. If I was going 1 degree lower than the green, this will be your 1, this will be your 2, this will be your 3. Let's do it properly. This is your 1, and you've got a running flat over there. It's a running flat. You can see over there, running flat. And then we go. Who knows? Maybe you can go something like that. You get another one like that before you get down there. And then after that, then we'll know that possibly that wave 5 will end after we get an impulse to the upside confirmed by another correction or a flag. So this flag is not just we don't just call it a flag because it's a fancy name or it's small. There is a clear correction here. It's a lower degree correction. If you go into this, if you downgrade your time frame into this flag and zoom in here, you will see that there's a clear corrective structure. One of the corrective structures that I explained last week. I don't know if it was last week. I think it was the week before where I did all the corrective structures. So of all those 5 corrective structures that I discussed, it will almost always be one of them in the flag because it's a corrective structure. Okay, so it's not just a mess inside here. There's a corrective structure if you go to that specific time frame. So what will this do now? My chart looks a bit messy now. Let's clean it up a bit. Okay, if we were to put on the count there to give us the guideline, this will be your first not impulsive move, 3-wave structure, WX, Y. Clear 1, 2, 3 waves. Show it like that. 1, 3. And then we go. That's done. Then we go for our wave 5. Okay. So a move like that has already happened on the Euro New Zealand dollar. So some of you know or understand correlation. So correlation, as much as the currency pairs may be correlated, you find that yes, they are correlated, but one currency lags the other. So you find that the one currency has already completed a move while the other one is lagging behind that move. So Euro US dollar and Euro New Zealand dollar is a good example of that. So before I go to Euro New Zealand dollar and the rest of the Euro pairs, let me just show the labeling here. So I'm just wanted to show the count there. Then you've got a 1, 2, 3 that we're anticipating to happen. This is the last corrective structure that we're anticipating there for a short move to the downside. Remember, we also have a short move to the upside on the dollar index. So that will be this move, and that will be that move on the dollar index. So Euro short term, we may be looking at this one to the downside. Okay. So let me show you that move that I'm saying has already happened. This is wave 3, and I tracked that move for a couple of days before we got a big move to the upside. So this is why I track these things. So long corrective structures like this always end up with a big impulsive move to the upside. So let's look at Euro New Zealand dollar, show you that corrective structure and how that wave 4 ended. Now we traded it. See here, it looks like a mess, but there's a clear count there. There's clear patterns, very, very clear patterns. There was no doubt about this one, right? Let's see here. So you see this one, okay, if I go to the daily, okay, there's no need to go to the daily. You can actually see the count there. You can verify the count on your own charts. Apply the rules that need to be applied. There's 1, 2, 3, 4, 5 there. So before we got that wave 5, we were tracking this wave 4, yeah, which is what we're tracking now on the euro. See here, you had a clear. You had a clear 1, 2, 3. Let's draw it properly. You had a clear 1, 2, 3 there, with the X in between. Another 1, 2, 3. Remember, we also had the deep correction on the Euro US dollar, deep correction in the middle. 1, 2, 3. What happens after the correction is done? Look what happens after the correction is done. This is why I'm tracking this. After the correction is done, this is what we anticipate. You get this big impulsive move, and then you get this correction here. Even this correction, if you go drill into it, it will say clear structure that needs to be labeled according to the patterns that we've identified. So there's patterns here as well. So look what happens. You get an impulse, you get a correction. After the correction, you get all of these pips to the upside. all of these pips, even though here it made a deep retracement, but we knew that we needed to make it off wave 5. So that's how we're looking at it. So this move has happened on the Euro New Zealand dollar. Euro US dollar is here. So don't be surprised when you get this impulsive move to the upside and then it consolidates like that. When you get a move like that, it doesn't matter if you miss that. Missing this first move here, it's not a problem. Okay? Because you're gonna get an even better entry. Why do I call it better? Because it's more probable than this one. Because this one can make an impulsive move and go back. But this impulse and the correction is, then you get all of these pips to the upside. Look how sharp that move goes. All right? So that's how we're looking at it. So while we're looking at the Euro US dollar, Euro New Zealand, so this is where the end of the cycle is. Why am I calling it the end of the cycle? If we just go, don't know if I need to go daily here. Let's go daily and switch off the count over there. This has reached typically the end of the cycle. So this is the, let me get the arrow over there. So you've got this ending over there. So I was anticipating that this will be equal to this. So it has reached the end of the cycle over there and it reversed to the downside. Okay, so I'm anticipating a long-term move, maybe not necessarily a long-term, but a big corrective structure on the Euro New Zealand. So let's go into this lower time frame here, see what is going on. We already got the reversal. Most of us already took this trade in our premium group, our paid group. So this is the end of that cycle. So when we got this impulse to the downside, this was clear that we are getting another correction, a pullback, a three-wave pullback over there. It's a nice three-wave pullback. So see, it's not just a flag. Let me just take that off so you can see that this is not just a flag. It's a clear three-wave move in the 4 hour. That is a three-wave pullback. Okay, it's a corrective structure. It's an impulse. It's an impulse and a correction. See there? Right, so we took this trade here on the breakout of this correction. So the breakout of fear, why are you trading the breakout? Because you can see that it is changing the structure. The structure is changing. So you need to, you can see that it has ended the correction there. So we took it here. So we are here now. We're getting all these pips to the downside. So what is it doing now? I'm going to do all the Euro pairs now. What is it doing now? Got the impulse. It is now correcting. It is now correcting. So how are we going to do this? Are we going to sell this here? Some more? If it breaks down? Possibly, but there's another possibility when if you're going to add or if you're going to take this trade, if you missed it here, there's another possibility that you need to be careful of. And I'm going to show you that has happened in another pair. So you could get something like this. Not like that. I mean, you can get another three-wave pullback here, right? Coming and tag here. Why am I drawing it like that? Coming and tag here. Give you another impulse. Giving you this 1, 2, 3-wave structure. I like to draw it nicely before you get the move down. So that will be, it could be any move. It could be an expanding flat. It could be, this is a proper corrective, a proper deep corrective structure for a move like this. This now is correcting all of this. So you may sell here and then you find that it goes and then it goes very slow and then it goes very slow because this in the middle is the corrective structure. Okay. So if you took it here, you're fine. Your stop is already moved to break even here. So we're still safe here. When it moves down here and starts correcting like this, you can see this is going to take a couple of days, maybe 2 or 3 days before it can complete this whole pattern. Right? Clear. And I'm not even putting the labelings here. I'm not putting up the labelings. I'm just showing you the patterns that always happens here. Obviously, we've got the rules for this pattern. So you could sell here because if you like it will go down, but we don't trade on luck. we trade patterns. Okay. All right. So pattern that has done exactly this after a 1, 2, 3 move, and then it did this. Last week I showed you. So most of these webinars that I host here, if you go back to the week before, 3 weeks before, or from when I started this and compare, you will see how the accuracy of this. It's the accuracy of waves. Let's look at Euro JPY while we're at it. So I can show you this pattern here. The move down and the corrective structure that I said will form. Let me get Euro JPY. Right. So Euro JPY, that's Euro JPY. We had this big move to the downside week before. And now everyone is getting excited that we're going all the way down. We're just selling. Okay, those latecomers, they'll be selling here, and then it reverses on you. Why? So when this swing ended here, I said last week, go watch the video. I said you need to have something like this, something like that. It's exactly the same as I am anticipating on that Euro New Zealand pair, because this is a better correction. So it can be a regular, expanding, running, or whatever. I like expanding and regular, right? I don't like the running flat. So this one is perfect. It's a perfect one if it plays out like that. Right? So it looks like it's going down now, but it could still come up. But if it doesn't, then it's fine. You sell there, break out of this flag. But I would prefer that it crawls up here. It doesn't have to. Okay, so that's what you will know JPY. So we're doing all the Euro pairs so long. Euro AUD. And then you'll start seeing all these patterns, how similar they are. So Euro AUD. Euro AUD ended the cycle over there with a strong impulse like that. What I didn't like last week about the Euro AUD and why I didn't want to take the trade was because it was doing this. Look at this pattern. This is none of the patterns that we discussed 2 weeks ago. If you want to look at the patterns, go look at the video I did 2 weeks ago on patterns, corrective structures. So this one gives us an impulse. What does it do after an impulse? It was correcting. Okay, looks corrective, but this move is in the same direction as the impulse. A correction is supposed to oppose the impulse. So this is why when this was doing this, I was never going to take this trade, because I would expect it to do something like this one. Let's do a different color. What I expect of it is to pull back. And right now it was not pull back. It was just, so this is what it did. One, my mouse jumpy. 1, 2, 3 comes and takes over here. This is exactly the same move as Euro JPY. Comes and takes here. If we drop here, we start getting corrections, then you are going. Then you are ready to go. Okay, so it's not just an impulse flag and then you go. You need to get proper corrective structures. And corrective structures are relative to the sizes of the impulse. This is where degrees come in. Okay, so you need to understand your degrees. Okay, so you need to learn the right way. So otherwise, you're going to keep losing money when you know exactly the direction. You know that this is supposed to go down, but you're selling it here. You're selling it here. But then it's correcting and it's taking you out like that. It's taking you out. Once it takes you out, then it goes in the direction that it's supposed to go, because the market does not move in a straight line. It goes in waves. Okay? So a wave, the textbook definition of a wave, not necessarily the definition, the function of a wave is to transfer energy. So it transfers energy from one point to another. So it's a medium of transfer of energy. So waves on Elliot wave, on the Elliot theory, is a transfer of price. So it's transferring price from one point to another. And every time, and the wave works like this. You need to have a pulse and you need to have a disturbance. So a wave cannot move without a disturbance. So we need the pulse, yes, and you need this disturbance. That's how waves move. So you need a transfer of energy. You need a transfer of price. You need to have a pulse. You need to have a disturbance. If you don't get a disturbance, then you don't get a price movement. I mean, look at water, for example, water in the ocean, those waves in the ocean. What if they were just still? The water will just be still and stagnant. But you need those waves to move up and down in cycles. And also these cycles, I mean, there are so many terms that we ignore when you're studying something, especially in Forex, because we're rushing to open live accounts. Things like cycles, you need to understand what a cycle means. So when I label my charts, I label the whole cycle. So you need to understand where you are in the cycle. It's important because you're going to have an impulse that is clearly going down. Yes, it will go down, but how far will this correction be? I mean, for all we know, this can even come back and take up here. This corrective structure can take up there before it goes down. So you need to understand where you are in the cycle. It's important. And you need to understand, you need to understand the basics. I get a lot of people asking me or telling me, can you train me? I know Elliot Wave. I just need one last thing. There's just one piece of the puzzle I need to add up before I could understand this theory. Maybe the problem is not that last puzzle you need to connect. Maybe the problem is the foundation. That's what I've learned as well. I've attempted to learn this thing many times and I gave up many times. And every time I gave up at one specific point. And I thought I just needed to add one piece of the puzzle. But it never added up until I went back to the foundation. So you need to go back to the foundation, the basics. Learn the waves, learn the cycles. All right, so let's carry on. Now that we got that out of the way, let's carry on with the analysis. So that is Euro AUD. So if you get an impulse down here, correction, it's a nice way to take a trade. Okay, this is what you're looking for here. You need to get an impulse down here. You need a small correction time frame in a lower time frame, then you're ready to go. All right. So we've done Euro New Zealand, Euro AUD. Let's do Euro Pound. Let's do Euro Pound. So again here, we had that trade here. We took it right at the top over there. Now it's making this big corrective structure over there. Okay. So now we had this sharp move during the BOE announcement. You can see the sharp move there. How can I draw it clearly? Let's draw it clearly. One over there. And now that move is being corrected. It is being corrected like this. 1, 2, 3. Okay, maybe comes here, takes up here, comes down. This is the forecast now. But you've had an impulse in yellow. If you had that impulse in yellow, it is being corrected by the red. What should come up after the correction? Another impulse before we actually come here and take the top over there. And if you take the top, you're getting a 1, 2, 3 regular flat. See, this is a big impulsive move down. It will be relative to this correction if it was that big. So you could get something like that. So right now it's pushing up. When it takes here, watch out for a reversal and something like this to complete this move to the downside. See here, you would have this flat here in the middle. All right, so this can even crawl up to here. If it crawls over there, you see that you will have, let me show you the correction that I'm talking about. You will have one, you do it with a different color so you can see. You will have one, you'll have two, you'll have three. That would possibly be a regular flat. And within this lower degree than this is another 1, 2, 3 waves before you get this move down. Remember, this is the impulse. That is the correction. That is the impulse. See how long it takes here. This way you'll be losing money while you're waiting for this to continue. You know it's going to go down, but you're going to lose money first before it goes down. By the time it goes down, you probably have blown your account. You don't even have money to trade up, or you don't like. Some even decide they don't like the pair anymore. They don't trade it. It's because of the waves, because of the patterns. All right, so that's pound. That's pound. That's euro pound, euro CAD, euro CAD. Similar, same thing. 1, 2, 3 waves. Now we're correcting. Look at that. 1, 2, 3. Now we're correcting. 1, 2, 3. Possibly take over there, and then we go down. So you may not go down after that. This is what could possibly happen, because I can see that that impulse is big. What you could have as well is this. It's another possibility, but the market will tell you if you're getting there or not. You could have even this and another one. What will that do? It will give you a W, X, Y. 2 corrections, double correction. And that whole thing becomes a corrective structure before you go. Maybe even a Z, but we don't know that. But we'll see what the market presents for us as it goes. But for now, you won't leave this move if it breaks to the downside. You see here, if it gives you this corrective structure here, because it may go, maybe going here. This is just an alternative. It can happen. It's very possible. Right, so the next one is pound CAD, pound chief. Same thing. 1, 2, 3 down. Now you're correcting this thing here. Okay, got 1, 2, 3. It's correcting here. Could go down. Can give you a WXY. 3 waves before it goes down. So this could be longer. So when I'm talking flags, I'm talking corrective structures. Okay. I think we're done with the euro pairs. Now let's do the pound pairs. Pound pairs, pound USD pairs. You'll see that similarly, you've got this big impulse to the downside. You're getting the correction over there. 1, 2, 3. Has this correction ended? Okay. I don't quite like this one much because this one looks like a regular flat. Okay, so it's okay. We can take it as a regular flat, right? Because there's the guideline. Remember, there's difference between rules and guidelines. So the guide is that the regular flat will typically not break the end of the impulse. It will end around the area of this end of wave A. If this is your ABC like that. Okay, so here it just is around. So you can use your own discretion as to how far around is. Okay, so after that, looks like the correction is finished, and then you get an impulse. This is what I like. After a correction ends, I need to get an impulse like that. So this is perfect. This is what happened on 3 weeks ago when BOE announced interest. Okay, so it's funny that the interest rate was increased, but the market went down. Right, so if you're a latecomer, you'll be selling here. You'll be selling here, and then the market starts doing this on you. Starts correcting. Clear 3 waves. Clear 3 wave pullback. 1, 2, 3. Clear wave 3 wave pullback. There. Now we're going. I like that. Look at this again, and then the impulse. So you see here, impulse 1, 2, 3. Then you get an impulse. Let's go. What happens after the impulse? Another 1, 2, 3 waves. What happens? Impulse. So now you'll start looking for this in the lower time frame. You start selling like that. This is how easy trading is if you understand the waves. Okay, you keep selling because you're looking for this now. 1, 2, 3. Easy if you understand. Okay, so that's pound, US dollar. Let's do pound chief. So we've been selling the pound even before the BOE interest rate in our announcement. I showed you last week how we traded this BOE. As much as we don't trade fundamentals, we trade the charts. The charts tells us what's going to happen. All right, so you can see here, we had this impulse move to the upside. 1, this is going correctively. 2, it takes at the top there. When it takes the top, then we know that it's going to reverse if this is going to make a pattern. So what happens after the impulse? Same thing I'm showing you with all the charts so far. The euros, the pound, you're getting these corrections here, these deep corrections. And what happens after those deep corrections? You're getting the impulse. This one has already got the impulse. What do you do now? Don't worry about missing this. That's small pips compared to what you're going to get to the downside. You're ready to go down. You're ready to go down. Okay, how far? Like it will tell us, maybe to the 61% over there. Okay, so this could even get here, take this low here before it continues to move up. What will that be? Another degree. 1, 2, 3. How will you know that it has ended? When it breaks this trend line to the upside with a flag here. You still have so many things to trade on this pair. Unless it's going all the way down, which I doubt, you still have so many trades here. So if you correction, impulse, trade it like that. So we'll see how it goes when the market plays out. But for now, this correction here has ended. This correction here, the deep one that we're looking for here, has ended. So now we're looking for these ones. Okay, that's pound chief. Let's do pound JPY. It's already moved so far now. See, everything is just the same. We're anticipating all of this. So this webinar that I'm hosting, I usually have it with my premium group traders, but going to every chart in detail, from the higher time frame to the lowest time frame, and understanding all the alternatives. Look at this one, BOE, move down. What happens? Clear, easy. Now we're going. All you need to do is just get lower time frame corrections, then you go down. Okay, what will that give you? 1, 2, 3 initially before it will tell you, or rather you're going to get a corrective move to the to the upside before you get another one down. That's how easy trading is. All right, that's pound JPY. You can see the pounds have started playing out. You need to get these pullbacks here. Get the pullbacks. Pound JPY. Let's do pound CAD. See, they're all just doing the same thing. All the same. That's pound CAD. Impulse. I don't like this one much because it's giving me a sort of a, okay, it's an impulse. It's a 1. Maybe it's going to go up again. Let's look at this. I thought it was going to give us a running flat over there. Got an impulse. You're correcting now. Looks like this. It could come there and give us an expanding flat. It has already broken the low. Yeah. So if it comes here and breaks, that's no problem. That's okay, because then it's just completing the structure. So this one, if it pulls back like this, it's giving you a chance to enter and give you a higher time frame, an even better risk to reward ratio. Right. So if it does that, comes up there and push up down, you're going to get a nice trade to the downside. So we're looking downside for most of the pound pairs and the euro pairs. All right. So that's pound CAD, pound New Zealand, same thing. See, all of them, impulse. So today I'm not showing all these long-term, but maybe for this one I'm going to show it because it's one of the clearest structures you can find. All right, so if you wanted to get a clear view of this one, go to one of the previous videos. You'll see how detailed this one was done. So here I'm looking at this string here. It started like this. Let me just identify my corrections there with a blue color. Okay, this one. Okay, that correction. Okay, this correction. Okay, this correction. I'm going to show you something interesting here that I want you to see. Okay. Now I've done it intentionally. I've done it intentionally, and you're going to see what I mean by that. So here you've got a yellow impulse. The reason why I'm going to do this is to show common mistake that most Elliot Wavers make when they trade. So here's one. So if you're going to label this one, you're going to label it like this. 1, 2, 3, 4, 5. You see here, I did not go through the whole cycle. I just came here and did a 1, 2, 3, 4, 5. Obviously, after 1, 2, 3, 4, 5, I'm expecting a B, C to the downside. I'm expecting that this thing is over. It's done. I don't know what is happening on the whole cycle. But the whole cycle is not exactly going to be like that because I'm missing something. What I've got here is only a lower degree of a bigger swing here. I had not done the whole cycle here. Intentionally, I left it out. So I can show you how it can be misleading if you do not understand where you are in the cycle. This is where understanding the cycle comes in. It's not just about the counts and the 1, 2, 3, 4, 5, ABCs, WX, Ys, and all that. You need to understand where you are in the cycle. So here you've got an impulse. You see here, I started that swing over here. And I just came here and I marked this over there and I marked over there and I marked this correction over there, marked this correction over there. And I said 1, 2, 3, 4, 5, the top over there. And then you're getting an A, B, C. All right, so you're finished. But you're not actually finished because you just took a swing without understanding where you are in the cycle. This is where you are in the cycle. You've got this higher degree expanding flat there. Your one big one here is actually here. This is where your big one is actually. Your big two is actually here. So if this is your big two, what does this mean? It means that this 5 is actually completing a 3 in here. ABC will then become, which means you're still continuing with the move to the upside. So that's important to understand the cycle. You don't, and then you see 1, 2, 3, 4, 5, you put your numbers there. You're gonna lose money. Okay, if you do not understand the theory properly, don't trade it with real money. Study first, understand it first before you start trading it. So if you do not know where you are in the cycle, you're gonna think this is done now. You're supposed to go down. No, what you're gonna have here is just a big correction to complete wave 4 before you get a wave 5. Okay, and also here, I've shown it before. I've shown this one before. Let me just show it again because I like this kind of corrections. You get an impulse here, and that impulse gets corrected with get a different color. Let's get a pink over there with a 1, 2, 3. What happens after the correction? You get another impulse. I like these ones because you get a nice A, B, C. See, 1, 2, 3 waves, regular flat. You would not have seen it. Some would have thought it's a triangle, which is it's not. It does not comply to the rules of a triangle. I'm not going to go through why it does not comply. So that's where we are now with pound New Zealand. We want the wave 4 to complete. The big wave 4 here. We already got the impulse here. Like with the rest of the pound pairs, that's what we have. We've got an impulse down. We're getting this correction. It has already tagged the top here, tagged the low. Now we're going. We just need to get this. So the pound New Zealand is still good to take. It still has a good risk to reward ratio compared to the others. So that's what you will have here. You will have a W. You could have X. Okay, who knows? You could have another WXY over there. Maybe even get something like that over there, giving you a flat correction. And that whole thing can be your wave 4, giving you a big W, 1, 2, 3. See? X, 1, 2, 3, 1, 2, 3, Y. See, and that will just be a 1, 2, 3. See, it moves in waves. You know it's supposed to go down, but because the market is not going anywhere here. It's just going flat corrections. All right, that's pound New Zealand, pound AUD. Let's do pound AUD. So pound AUD, of all the pound pairs, the one that has got an incomplete cycle to the upside, and it's making a very nice structure to show that we may still get upside. And this is how I'm looking at this now. Like all the rest of the pound pairs during BOE, we got the drop, but now this one is giving me it gave me an impulsive move to the upside. So an impulsive move cannot just stay impulsive without a correction. So here, what is happening? I get a corrective structure in green. 1, 2, broke the top here. But remember, this green is correcting the red. 3. I want it to come take down here. And then it will give me this red over there. This is what I'm anticipating. Come and take over there. What will I get? I'm going to get a yellow to the downside. Come take here before I get my move to the upside, because the cycle is incomplete. My target on this one is still over 176. Look at this now. What do I have now? A regular flat or an X bigger degree. See, we're supposed to go down. We've got this big move to the downside. Now you think, oh, you've got a big impulse to the downside. Okay, you're going all the way. How do you need to know where you are in the cycle? Is the cycle complete? That's what we teach the guys, how to identify the cycles. Right, so for now, you're not going to leave this move. You're not going to leave this move to the downside here. If it gives you this corrective structure here, if you get a flag here, you must just be careful here because it may take here and reverse. So this is not safe. So unless it does something like this, then you can take it. Be a 1, 2, 3. Okay, but I'm more inclined to this taking down here, and then we get this 1, 2, 3. Okay, that's pound AUD. Think I'm done with all the pound pairs, the euro pairs. Let's do some of the US dollar pairs that I didn't cover. US dollar CAD. So US dollar CAD, if I'm looking at this one on the daily, this is what we've been looking at. Look at the previous videos, you'll see how this one was done in detail, long term, all the way down to the lowest time frame. So you got this impulse and all this correction which we traded, then we got this big move to the downside. So now we're getting this retracement. This is on the daily now. 1, 2, undo. 1, 2, 3. But this is not equals to that yet. Doesn't have to be, but I prefer it to be. Let's see what is going on, and we don't force the buyers. Let's go to the 4-hour time frame and just focus on this. See what is going on. It's still that move. There's a number of possibilities here. And here is so we've got what looked like an expanding flat over there. So this is an impulsive move, corrective, impulsive. After that, you get 1. Okay, my pen has started. You get 1, 2, 3. Okay, so you can see that one. I'm going to put on the labels now here to identify my structures. The first one is a W. Why am I labeling it a W? It's opposing the swing. This one is a X, same direction as the swing. What am I getting here? I'm getting something like this. Yeah, so it means I need to get another structure like this one. It doesn't have to be an expanding flat. It can be a zigzag. It can be a flat correction, regular, expanding, whatever, triangle. It can be any. If it gives me that structure, let's just assume here it's going to give us a zigzag. Then this may still give us one more to the upside. And if that's not the case, it's going correctively here. You wait for a corrective structure here. You sell it like that. So then that will give you a 1. And you can see this is very small compared to this one. This is a very small structure, but you won't leave it because it's a corrective structure. If you've got an impulse, you've got a corrective structure. If it's taking you out, then it takes you out for 2% of your account or less. Okay, so it doesn't really matter. That's how you're looking at this one. Right, New Zealand US dollar. So New Zealand US dollar, we already took this one some time back. My indicator doesn't want to come up. Oh, there we go. That's coming, correct. Just gonna get the indicator up. MACD. Okay, so this is New Zealand. Let me go to the higher time frame. I explained what we're looking at on this one, on the higher time frame last week. I think for almost every week I do this webinar, I explain this chart as well. Right, so what you have here, this is just the daily. What you have here, in the long time, you've got this impulsive move to the downside. Obviously, there's a whole lot happening before that. You've got this impulsive move happening to the downside, and then you get a correction. Initially I thought this was going to be A, B, C. Okay, this being an impulsive move to the upside, and this being another structure on this side. But, and this is how I would have thought it was going to be a 1, 2, 3, 4, 5. You can see that you've got a pattern there, you've got a pattern there, you've got a pattern there, you've got a pattern there. 1, 2, 3, 4, 5. Clear, A, B, C, right? And then you study a 1, and then you study a 2. The reason why I discounted this count, or I invalidated this count, is because this wave 2, this apparent wave 2 that I was forecasting, came and touched here. This cannot be the start. Adjust my count, 2, 3, 4, 5 over there. Then maybe this would possibly happen. You get a 1, you get a 2, you get a 3, giving you this regular flat in the middle, and then another wave to the upside, giving you A, B, C. So I'm anticipating reversal here. Okay, anticipating reversal. See if we're gonna get that reversal. Let's look at it. Let's clear all that and go down here. Gonna go to the 4-hour. We already took the trade right at the bottom, in anticipation of that reversal, because of a number of confirmations. So initially, when this reversed, you could see here you had divergence over there. Right, so then it gave you an impulse and this corrective structure. When we broke out of this corrective structure, we took the trade, okay? Took the trade around there. But now, it is doing something like this again. 1, 2, 3. This is what it looks like. It looks like it's a bigger pattern now, expanding flat over there. So if it keeps coming down like that, then it reverses with the impulse. It's an even better entry to the upside. Because then what you would have is a W, which is these 3 waves, 1, 2, 3, X, because these 3 waves. Or it could be 1, 2. It could be 1, 2. Yes, it can actually be 1. But the price does not trend only in impulsive moves. It can trend in corrective structures. So you could have something like that, a WXY 1, 2, 3, and then you're going to get a deeper correction somewhere, depending on how the market moves. Or you could be now on a nice 1, wave 1, wave 2 here, and then we'll be ready to go. So if this goes down like that, you can see we're already on above the neutral line on the MACD here. Obviously, we don't trade indicators. You can see we're already on the neutral line about the MACD. So I would not be surprised if this comes down here, takes this, reverses, gives us a confirmation, and then we go. That will be a very nice trade for many, many pips to the upside. But alternatively, this could just be a 1, 2, 3 wave pullback. Could just be a 3-wave pullback. Okay, and then get a move to the downside. But right now, it's telling us that it's correcting. It's not going down. This is not an impulsive move. It's a corrective structure here. It's a corrective structure. We're still gonna get one more up. Okay, if we don't, it's okay. Then we'll be making that pattern. Right, so we'll keep an eye on this one. That's New Zealand. All right. Let's see. Okay, I see somebody's asking about the sound. I don't know when that was posted. Only one person, so I think it's only one person having a problem. Okay, so next one, I'm gonna do the US dollar ZAR. So US dollar ZAR, last week I said I wanted to go to at least a minimum of 1448. We've reached that area now. Right, so let's do this one properly. Let's do US dollar ZAR. Structure, I've shown this structure last week. Let's go daily. All right. This US dollar ZAR, big impulse to the upside. Let's fix it now there. Right. Big impulse to the upside. Correction. 1, 2, 3. Connector. 3. Correction. 1, 2, 3. Let's do this one properly. 1, 2, 3. W, X, Y. It's 3 waves, 3 waves, 3 waves. Right, after that, correction ends. What do you get? You start with the impulse. 1. What happens after the correction? 1, 2, 3. That's your structure. It's a zigzag. Zigzag here. Let's see what you have. How do we label that? 1, 1, 2, 3. You get another impulsive move, but in the lower degree, supposed to get wave 3, but it doesn't go all the way. It does correcting in pink. 1, 2, 3. Okay, I call this a 1. In the lower degree, 2. So I said I cannot label wave 3 before my wave 3 goes beyond the 1,618 extension of the move. This is my fib extension from 0 to 1 back to 2. I need this wave 3. That's my rules. I cannot label a wave 3 that is lower than this 1,618. If it's gonna be an impulsive move, my wave 3 must be above the 1,618. Today it has just touched that. All right, so that is just the minimum for me. That's just the minimum. So if that is my wave 3 over there, what am I gonna get now? So is that one impulse, wave 2 with a zigzag, lower degree with a regular flat, and now it has just reached the 1,618. Okay, so what do we anticipate there? We're anticipating that we're gonna get a pink correction here. This is the pink correction. This one is the red. 1, 2, 3. Came off. Green lower. Green impulsive move. Completing there with 4. We have not even completed there. So I've got 1, 2, 3, 4. We still need a 5. Still need a 5. Where's my wave 5? Wave 5 in red. We have not even got a wave 5 in red. So long-term US dollars, the ZAR is going to be weak against the dollar. For the next coming sessions, the ZAR is going to be weak against the dollar. Let me get my wave 3 again here. I need it to end over there, because we are only just completing a lower degree wave 4. Expect consolidation there. After the completion of wave 3, expect this consolidation over there before you get this wave 5, and then you get a bigger. That wave 5 will be completing before you get a bigger consolidation in red to complete the yellow wave 5. So you see, US dollars weakness, right? So the ruling party, we know in December, there's an elective conference in December. So more political uncertainty would possibly affect the dollar. The ZAR against the US dollar. So long-term US dollar weakness. All right. That's US dollar, ZAR. Okay, US dollar ZAR, that's what we're looking at. So wait for that consolidation. When it breaks out of that consolidation, you can ride the trend. And over there. So the next one, let's do gold. Gold. So 3 weeks ago, I said I'm anticipating to buy gold around the 1245 area. This is the daily. I've done this chart a number of times. Go from the 23rd of July up until last week. We're discussing gold, and it has been 4. Now we're getting this 1, 2, 3 that I've think it's still not yet completed. Okay. Now let's go down here. We've got an impulsive move to the downside here. So the other day, a couple of weeks back, we had this impulsive move, and everybody was thinking now, okay, gold is ready to go, but it pulled back like that. So let's just go in there and scroll in. I'm not going to go all time frames on gold. Maybe I can do a full analysis on gold next week again. But so far it has been good. Go to the 4 hour. Let's go to the 4 hour time frame. It's just loading slow. Let's get it right. There we go. So this is what I'm anticipating with gold here. You have this big impulsive move to the downside. You have this impulse over here. Okay, now it's going down. We're thinking that we're getting a WX, and then we're going to get a Y at the 1245 area. Why the 1245 area? Because at that area, this will be equals to that. Okay, as we know, the market does not move in a straight line. It has given us this impulse here, a down move to the downside. We're getting we got a 3-wave pullback here. Okay, got a 3-wave pullback. That is just a lower degree. If you were to label that, that will just give you a lower degree WXY, which means now you'll anticipate that this will be equals to that at the 1245 area. Okay, so you just keep an eye on this one. Keep an eye on gold. Now, if we get something like a corrective structure like that, what I would have expected with gold was for it to come and here before it goes down. Then that would be a regular flat. Okay, so if it does that, still no surprise. That's still okay. Okay, we know gold will go up at one point, but as I've said many times, we don't go in a straight line. So wait to see what happens here. If this breaks to the downside, you take the trade to the downside to complete this move. This 1, 2, 3. That is gold. What else am I missing? Somebody chat on the chat box if there's any chat that I have not covered here that they wish to be covered. Okay, let's do oil. But I wanted to do all the other currency pairs before I do the commodities. Okay, so no one is typing on the chat box. So I'm going to go for any specific chat that you guys want discussed. Right, so oil daily. Okay, I'm about to get to the end of the webinar. Oil daily is something like this. We've got a long-term impulse to the downside here. Very long-term impulse to the downside that has played out like that. I've already done Audi JPY Percival. You can watch the video. Or have I? Okay, no, I think I have not. I'll do Audi JPY. All right. So that's oil. Impulse move to the downside. What do you get there? You get a 1, 2, 3 W. You get a 1, 2, 3 X. So you're anticipating a 1, 2, 3 Y. Oil mostly moves in corrective structure. So 3 weeks ago, I said we are waiting for a correction here on oil. Waiting for a correction on oil for a move to the upside. All right, so this morning when we were doing analysis with my group, we also looked at the possibility that oil could do something like this as well. This is the daily. Let's clear everything. if it doesn't give us that deep correction and we get an impulsive move to the downside, which we have not got, it has shown that it's moving pretty slowly. We also anticipated, let me just draw this one again, once more again, 1, 2, 3, and do that. 1, 2, 3, so that's W, that's X. This Y has not completed, so you would get something like 1, 2, 3. This is why I was looking for this deep correction over there, right? So if that is not the case, but I think it is playing out like that. This would have now tagged the top here, but I would have expected to get a sharp move to the downside, sharp move like that, to do this 1, 2, 3, giving us a flat before we go. But this alternative is not likely because this is moving slowly. So moving slowly, showing us that this move to the upside is still not completed, with a target of around 65 area on oil. So that's how we're looking at oil. So I missed AUD JPY. I think I missed the pound pairs actually. I must do the pound pairs. Okay, let me run through the pound pairs, starting with the AUD JPY. AUD JPY. So on the daily, AUD JPY, look at this. Impulse correction. We're looking for this to continue. So if you're looking at the lower time frame, you can see that this one has made an impulse. 1, 2, 3 will possibly come here, tag, get 1, 2, 3, go and complete the cycle over there. Okay, so then that will be your WXY, completing the yellow move. All right, so that's how we're looking at this one. Or it could even be, here's another one. But all the alternatives are pointing to the same thing. This is 1, 2, 3, 4. We've confirmed with the FIPS that this 1, 2, 3, 4, 5 has completed. And this will be a big A, B, with your C, A, B, C. Basically, this is going to be 1, 2, 3, W, possibly KW. Actually, this is W, X. Okay, and then we start another 1, 2, 3, 4, 5. Right. So I'm not focusing that we're going to get an impulsive move here. Okay, because it can be any structure. It doesn't have to be impulsive. But I like the first one better, where the string ended here, not the 1, 2, 3, 4, 5, where the string ended here, and then we're getting a 1, 2, 3 like that. It has already broken the top for an expanding. If it turns here, it's fun because it will be a running flat, but I prefer them hitting the bottom like that, because after that they give very nice moves to the upside, and that will give us that 1, 2, 3, that one expanding flat over there, as you can see, to complete the upside. Right, US dollar JPY, US dollar JPY, impulse 1, 2, 3, correction in the middle, 1, 2, 3. Now we're anticipating that we're gonna get a 1, 2, 3, and that will be a W, X, Y. 3 corrections in combination. All right, so this here, if we go to the 4-hour, happy with US dollar JPY, Percival? So here, US dollar JPY, 1, 2. I don't like this, the way that this is going so slow. All right, so this could give us an expanding flat like that for a one more up before we go up, we'll go all the way down. Remember, dollar index, when I started, I said we're waiting we've got a similar correction like this, and I'm anticipating one more up before I move down. So if we get that one more up and an impulse down with a flag, then we start selling the US dollar. So short term, I said US dollar strength in the weeks ahead. Euro JPY, I already did. US dollar JPY, Chief JPY. Let's clear all that. Chief JPY. Got an impulse there. 1, 2, 3. Looks like it still wants to push higher. It comes and pushes here. Maybe one more move up with the US dollar before we start going down on the US dollar, on the JP pairs. Okay. That's Chief JPY. Next one. CAD JPY. I'm not going to do the rest here. CAD JPY. So CAD JPY. We've got this impulsive move to the upside. 1, 2, 3. Now we're getting another impulse, correction, impulse, possibly giving us 1, 2, 3, W, X, Y, 3 waves. It's always 3 waves. You don't force it if it's not there. Okay, so let's go into the lower time frame there, or maybe this time frame. So we've got an impulse, you're getting a 1, 2, 3. Possibly you get something like this before you get another move to the upside to get a W, X, Y. Who knows, it could even come and take over there. Right, so we'll see if this comes down here, takes, and you see a sharp reversal with a correction, start buying. Right, so that's CAD JPY. Actually covered everything. Let's look at the S&P 500. S&P 500 lastly. That's the last pair I'm covering here, the S&P 500. I'm not even going to spend much time here. We've spoken about this for the last 3 weeks. It has just been crawling up and up and up. Scrolling up and up. Keeps scrolling up and up. This is the chart that I've got over there. We just want this thing to drop. Keeps making higher highs. Here it's going down correctively, so we're going to get one more. So if just put on the indicator. I don't know what happened to my indicator. Okay, it's back on. Right. Right, so thank you very much, guys, for attending. This is the last chart that I'm covering here. You can see there's clear divergence there on the S&P 500. It keeps going up. It will drop at one point. It's just a matter of time. It's just a matter of time. We are on the wave 5, confirming with the divergence. Wave 5 must have divergence between 3 and 4. I mean, between 4 and 5, there must be divergence for this to be a valid impulse, as we've labeled it there. Right, so thank you very much for attending. Right, so if you want to get hold of me, I'm just give you my details. They'll be in the description on this video as well. If you'd like to get hold of me, and if you've got any questions, you can stay on after I've stopped the recording. My number is +27 82. This is an international number. 827 966 324. Right, my email address is vmanena, that is MANENA at gmail.com. gmail.com. If you want to get hold of me, you want to inquire about training and all that, that's where you'll find me. Okay, so we also have a free Telegram group where I post 1 or 2 charts. Where I post 1 or 2 charts per week. It's called t.me/trading_waves. So that is t.me/trading_waves. Okay, right, and then that's all we have. So most of the time, I'm easily available on Telegram, on email. I'm easily available there. On Facebook, if you just put on the Facebook profile there. My Facebook profile, it's loading up there. You're welcome, Zaire. So that's my Facebook profile. Where am I now? If you want to get hold of me. So as I've said in the beginning, these webinars are going to be on Mondays at 5 p.m. South African time. That is 1500 GMT. So that is me over there. That is my profile name on Facebook. Those are my names. If you want to follow me on Facebook, you can also inbox me on Facebook. All right, I'm going to post the recording so that it doesn't get long. And if you've got any questions, you can ask. Thanks for attending, guys. Do share the link. You may help someone out there. Thank you. Cheers. Bye-bye. All right, you guys happy with everything? Can I end the webinar? Excellent.